Hi everyone, it is August 11, 2022, and you're watching the Small Account Challenge that we are doing every week talking about global markets. Let me discuss to you what I just recently did over my eToro accounts. Small Account Challenge is a challenge for those who are new, wherein we try to deposit $1,000, $2,000, at most $5,000 into the account, withdrawing every week or every month if we can, to make about $100 to $1,000. So that's the goal with a few leverage in mind. For eToro, this one, what I did here, I'm gonna show to you two accounts. So for this account, I lost initially mga 2 weeks ago some money from trying to short Amazon. I was able to recover most of the losses through some longs. So I'm gonna show to you that past 30 days, July 12 to August 11, may mga tama, may mga mali. So mali ako dito. I tried to buy and nibble on Weight Watchers and Party City. I was wrong there. I bought some Disney 108. Kahapon kasi up na tinapong ko. Ngayon ang ganda ng Disney numbers. So I'm gonna share to you what happened there. I will also explain to you what you can also do into your small accounts if you want to follow. Let's see, no? So Disney did very well. Actually, Disney hit as high as 120 after hours. I'm gonna take a look at, I'm gonna show you a few of the results, and some of my presentation for today will involve a few of those mga companies that we like. So for this week, for tonight, I'm gonna be sharing about, of course, Disney firing on all cylinders, and a few dumpster treasures like Archer Aviation, Lilam, and Wheels Up. So eto mga to, these came out from SPACs. These are some eVTOLs and private aviation players. But for the purposes of a few of the earnings results, let me share to you what Disney did this quarter and why it may make sense for people who want to trade or invest to include Disney, yes, the House of Mouse, into your portfolios. So let's take a look at the first quarter, the recent results. So starting this quarter, the revenues for the quarter grew 26% and 28% respectively. Let's read to you. We had an excellent quarter. Our world-class creative and business teams powered outstanding performance at domestic theme parks, big increases in live sports viewership, significant subscriber growth at our streaming services, with 14.4 million Disney Plus subscribers added in the fiscal third quarter. We now have 221 million total subscriptions across our streaming offerings. That would be higher than Netflix with 220 million subscriptions. But this is, of course, not just Disney Plus, but all of their subscriptions, including Hulu, ESPN, and so on. We continue to transform entertainment as we near our second century with compelling new storytelling across many platforms, unique, immersive physical experiences that exceed guest expectations. All right, so you can see the revenues grew from 17 billion to 21.5 billion. That is a 26% change. 9 months ended, it grew from 48 to 62 billion, a 28% change. Income from continuing operations grew more than 100%. On the quarter, it went from 1 billion to 2 billion. 9 months ended, also up 100% from 2.3 towards 5 billion. Total segment operating income grew more than 70% from 6 to 10.5 billion. Net income from continuing operation up 63%, such that their EPS per share from continuing operations is up 63. So basically, they have a ton of continuing operations of cash, 3.5 billion. Here, free cash flow, they reported a negative here, primarily because of continuing investments. So let's take a look on the segment results. How did they get that 5 billion or greater than 100% in income from continuing operations? Let's see. So far here, they are even saying that you add the content license early termination, 1 billion. You add some corporate shared expenses, 800 million. Add some restructuring, add some other income, expense, and interest. Total segment actual EBIT is $10.5 billion. If you amortize your Hulu intangible assets, is another a billion. So that's how they did some of their accounting. Revenues for this 9 months is 62 billion. Total segment revenues is 64 billion. Let's go through here. What is the 64B? 42 billion of that is Disney Media and Entertainment Distribution. 20 billion of that is your Disney Parks and Experiences, going up 92% year on year. So we can clearly see that people have traveled and went on to theme parks. Disney theme parks went from a loss of 169 million to a net positive income of operating income of 6.4B. So this is where a huge chunk of profits came from. Therefore, your 60% income all came from the reopening of all the Disneylands all over the world. Disneyland Paris, Disneyland Shanghai, and so on. Revenues. So this one for the Disney Media and Entertainment, to take a look on that 42 billion here, let's take a look at that revenue. The 42 billion comprised of 22 billion linear networks. Their direct-to-consumer network is 14 billion now. Their content sales licensing is 6.4 billion. And then you eliminate some inter-segment revenues. That's how you get the total 42 billion. So these are all yung bago na yung direct-to-consumer. Of course, linear networks is meaning their cable networks. Okay. All right. So operating income, 4 billion. Linear networks are 6.78, so halos unchanged. Direct-to-consumer, of course, they are having to build content. It is 2.5 billion loss here, but it is still fine overall kasi that 2.5 billion of direct-to-consumer loss came from a strong growth naman on their D2C segment. And it will be able to pass the scale that they are moving towards. Linear networks, okay, this is the domestic channel, 5.7, international channel, 1.5. All right, so 7 billion yan. Domestic channels, let's just read through this. Domestic channels still managed to be 5.7 billion. Operating income is 2.1 billion, reflecting high results on cable and broadcasting. This was due to a growth in advertising revenue, a lesser marketing cost, and increase in affiliate revenue. Advertising revenue growth was due to increase in rates, higher impressions, timing of NBA finals, which aired in the current quarter compared to last 4Q. You had a delayed start of the 2021 NBA season due to COVID-19. Programming and production costs were comparable higher for NBA programming, and an increase in sports production costs was largely offset by lower MLB and soccer right costs. Higher NBA rights reflected the timing of the finals, which was programmed by ESPN, aired on ABC, and contractual rate increases. You've got UEFA. Euro typically occurs every 4 years. It was originally scheduled in 2020 but was held in fiscal 2021 due to COVID-19. So mostly sports-related streams. Let's take a look. Lower programming costs were also due to a low-cost mix of programming. So you've got the timing of the Academy Awards, fewer hours of scripted and acquired reality program, partially offset by the cost of airing new NHL programming. All right, so international channels, let's take a look at that. The international channels for the quarter increased 7% to $1.5 billion. Actually, I took a look on these. Let's go to the highlights. Sige. Disney Plus, let's take a look at this. The D2C revenues are now 5 billion. Operating loss is $1 billion. So revenues increased 20%. The loss is due to higher loss in Disney Plus, lower operating income in Hulu, and to a lesser extent, a higher loss in ESPN Plus. Lower results in Disney Plus reflected what? Higher production, technology, and marketing costs, offset by, of course, the increase in subscription revenue, and to a lesser extent, the advertising revenue. Okay, so In general, the strength of this 14.4 million additional subscribers in Disney Plus is the bigger story there, especially when there was a challenging environment for Netflix, a challenging environment for Warner Brothers Discovery, for Paramount, and all other streaming related entities like Roku. So the fact that Disney Plus grew tells you the value that people see in their content, the value for money that Disney gives for just about $7.99 per month. So that's their ad support. And I believe their non ad support is $9.99. And they actually shared that they could grow additional $3 on that monthly. So you can see that there is strength for the D2C product offering. So far, I listened to the quarterly results of Disney here. A thing to also note is that right now, the average monthly revenue for domestic Disney Plus decreased from 662 to 627 due to multi-product offerings. The average monthly revenue per paid subscriber for an international Disney Plus increased from 552 to 6.31 due to increases in retail pricing offset by an unfavorable forex exchange. So you can see that Disney Plus and Hotstar increased from 0.78 to $1.20 due to higher per subscriber advertising revenue. So you can see that the average ARPU, iba-iba siya, no? Disney Plus, so US and Canada, ito siya, $6.27. International, it's $6.31. Disney Plus, excluding Disney Plus Hotstar, that's 6.29. So global Disney Plus, that's $4.35. ESPN Plus is $4.55. Hulu, the SVOD only, it's $12.92. Live TV streaming and SVOD for your sports, it's $88. So mataas yung live TV, yan yung mga pay-per-views eh. Okay, so very strong numbers tells you that this ARPU can continue to go higher for Disney. You can see that $6 have leeway to go 50% higher towards $9 to $10. You can see that Netflix charges around $12 to $15. So there's leeway for Disney to continue rising in pricing without affecting your consumers to get out of the system. So malaki pa yung leeway for that. And you can see that from content sales, no? So far, Doctor Strange in the Multiverse of Madness actually hit $1 billion. Compared to Cruella in the prior year quarter, you also saw medyo malakas din yung Thor. It hit $700 million for that movie. This is also very good, no? Disney Parks, Experiences and Products, they recently opened the Disneyland Paris with the Avengers Campus. It was a good hit. You've got a lot of people also nag-increase yung demand of international tourists going. So you are seeing a recovery talaga in the Disneyland theme parks. You can see that improved results were primarily due to growth at Disneyland Paris, partially offset by the decrease in Shanghai Disney Resort, which they just opened in June. Higher operating results at Disneyland Paris were due to increase in attendance, occupied room nights, yon. Then, ito pa, let's read through this. Guest spending growth was due to an increase in average ticket revenue and higher average daily hotel room rates. You can see that in the management call, they discussed that their hotel rooms right now are 90% occupied, and their reservation bookings all the way till 2023 is very much evidence that there is no such thing as a recession problem in terms of theme park demand. So malaki to. This is corroborated with the entire management call as well of all the travel plays. If you listen to Expedia, Airbnb, Booking, Hilton, Marriott, all of them are saying the same thing. Even Universal Studios during the Comcast call, very strong numbers for Orlando in Florida. So malalaki talaga yung theme park place. And you can see that this increase in parks and experiences is likely to accelerate next quarters ahead. So due to that, strong numbers for Disney merits it to get an A plus on this quarter's report. So it isn't actually what's this? It's not a surprise why Disney is up on after hours by 11%. But even if you take a look on that after hours move of Disney, We think that even at 120, it may actually continue to accelerate, even if has been rising already since this July lows of 90. You can see that this one seems to be more of people buying that, no? Lahat tong buyers. Eh ngayon, 120 yan, no? So mga yan. Maybe there will be some profit takers here at 125, but we would assume any prior to this number, no? After the gap up, chances are at 115 to 120, that's still a buy zone wherein you will see it trail. I would say that Disney will travel towards 130 to 142. So in the short term and in the long term, you've got the Disney sellers who have been thinking about the problems on the streaming as evidenced by consumer spending woes in Netflix to only affect actually Netflix and Paramount with the, or Warner Brothers. We have not seen any deterioration when it comes to Disney. So this one is a primary leader now in the D2C market for streaming, growing in an industry that has been difficult. Let's take a look on your Disney shares here. From a fundamental area, no? Okay, so fundamentally at 112, after hours it's 120, it will be shooting up to about $220 billion of market cap. Now, income of Disney is expected to go higher, as you can evidentially see from rising sales. So, in order to value Disney, my guess is that you try to check, even with the super strong performance of the Disney streaming, those sales, no, go simply to Disney's investor relations, kahit nung 2019. So just go to the 2019 reports. Ito yon. So look at here. So go to the events and presentation. Find prior to the pandemic, diba? So view all or search. So you search 2019 annual report. Toto. Another thing to really like about Disney is obviously they shared na malakas yung excitement on Wakanda Forever, Black Panther. Actually, I will give you some notes here. So Disney is trading here near your 2015 to 2019 areas, that $200 billion. So this entire 5-year desert of Disney was brought about by mostly their hesitation for Disney streaming. But you can see that since they opened Disney streaming, todo gap up yan, 120, nag 140, even reaching as high as 200. So my sense is that it may not reach 200 ASAP, but it might reach 140. So you will assume na kaya niya mag 140 because it's firing on all cylinders, not showing any deterioration when it comes to streaming. So these are some stats that I heard na medyo interesting trivia for you. $1 billion for Multiverse, Thor, $700 million. That's good. Marvel fan base is still the largest draw for Disney. People have been subscribing to Disney Plus due to Marvel's steady flow of releases. Of course, the BTS edition, the K-pop genre, was also added for the BTS fans. So that also increased subscription towards Disney Plus. And excitement for Black Panther, Wakanda Forever is amazing. If you haven't seen the trailers for Black Panther, Wakanda Forever, try to check it out. I believe that would be a monster blockbuster for Disney movie as well. Audience expansion, long-term profitability is there for Disney Plus. So sports hours grew 47% quarter on quarter. NHL deals, Stanley Cup, up 60% across cable and broadcast. So malakas yung cable network pa rin. Music to the ears also of all streaming sports services like Fubo, because Fubo is a competitor of Disney Plus. Chances are, because of the strong payments of people, the audience in the sports of Disney, I sense that it tells you that the industry for live TV sports is really, really strong. All theme parks are now open. Music to the ears of all reopening place, as I said. Maganda response on Avengers Campus. Now, this Avengers Campus is a Marvel Cinematic Universe themed area for all the Marvel fans out there. It's located in Disney California Adventure, Walt Disney Studios parks at Disneyland Paris, and they're developing one for Hong Kong Disneyland. So ito yung mga attractions. They have mga web slingers, Guardians of the Galaxy, mga bagong attractions in Disney. This is the demand in parks continue to exceed expectations, tracking 2019 levels. So ito yung mga Doctor Strange, Avengers headquarters, as more and more people are really very very happy with international travel. You've got visitations. International visitation will be additive to margins, as guests tend to stay longer, spending more money when they're there as well. Imagine mo, you travel to Paris para lang to stay a day. Sometimes they will spend more, no? Spend more days in the Disney. Sometimes one to 2 days or more. So they're also interested to do NBA renewals, obviously because ang ganda nung NBA championships and the entire college sports, Formula One racing. So a lot of good things to discuss in the Disney report. um, yeah, sobrang daming magaganda nangyari sa Disney report. Ever since Disney launched Disney Plus, we have seen acceleration. Talagang kinakain ni Disney Plus yung launch ni Netflix. So the people who were thinking in the past that Disney's gonna be able to topple Netflix by 2025, well, as early as 2022, Disney is ahead of expectations. So my sense is that 140 is an easy feat for Disney. And yung 200, maybe if it can prove that recession resistant siya, you'll see people actually pay up for Disney. Ongoing strength of the brands and businesses, even under Bob Chapek's rule. So, ganda. Look at the 2019 levels. The revenues was about 19 billion. Year ended during that was about 69 billion. That was 9 months. And look at the current results, no? 19 to, 69 to. Look at these. Your revenues are almost at par. Oh, recover ka. Nire-recover na ni Disney lahat ng nawala sa kanya during the COVID. Here. Oh. There was 63 billion. So, you would assume na babalik ka talaga sa levels na at least plus the fact na during this time, wala pang acceleration yung Disney Plus. Which is ngayon, kitang-kita, nag-accelerate. So, ganun, no? Tingnan mo, same. Net income, 10B. EPS, $6. So, kaya lang naman nag-ano yan dahil sa ano yan sa segment ng D2C when they were starting the Disney Plus. So, ito pa, Parks and Experiences, 26B. How's the parks now? Look at it. Nandito yung parks ngayon. Parks is back. Ayan, no? Parks is back. 21B. So you can see that to hit 26 billion again, you'll see maybe a 20 to 30% further increase or 40% increase for your Disney parks. So you're seeing a strong recovery in Disney. That's something to be happy about. So, ano yung style for the small account challenge? The style there is should buy back Disney ASAP. So, 110, 120, that's a buyback. A few things that I'm looking at, medyo si Zoom, I'll have to buy this back. I am bullish on Zoom Video for next quarter's earnings. It's just trading at 5 times free cash flows. I made some money on Fubo. I bought at about 250, 270s. Nagtapon ako sa 380s. I'll be back on Fubo at 350. Farfetch, I would try to get in at $9 if I could. $9 below. Bark did well, very well. Actually, nag $2.15 to. I have Bark in my IBKR. Dito, masyado ko na labas ng maaga. 48% up lang ako kay Bark. I was able to exit GDRX at about $9, 980s nung nagkaroon ng announcement of a potential renegotiation with Kroger. So I've been making some money on, you can see the shale producers. I will try to get some of these mga shale, yan, Fubo, I'll get back in. I'll try to get back in on Square. So you can see, binawi ko sa mga Expedia, Square, Fubo, Bark, MRO, Devon, yan, dyan ako kumikita. GDRX, Fetch, Zoom. I'll be back on C Limited and I'll be back on Disney. I'll be back on those. Talo ko last time dahil nagkamali ako for shorting Amazon and the index. So, in-exit ko naman yun ASAP when I knew I was wrong. So, nowadays, I've been trying to add some Alibaba. I'm bullish on oil. I bought some Tencent and JD thinking that if the US market is pretty relatively expensive versus some of your cheap big tech in China, I figured some money will flow towards it. Since I'm bullish on oil, I went long some PetroChina and CNOC. I am bullish on marine shipping, ocean freight costs, so I'm long on ship. I'm actually gonna be buying Zim. Forgot. Yeah, so I have Zim in my IBKR port. I'll try to buy this if I could. Zim here. I'm bullish on Zim next week's earnings. Yeah. So far, Coinbase did badly, pero umangat obviously because the market is very up. I couldn't get Archer Aviation here or Lilum or Wheels Up in eToro, pero meron siya sa IBKR. So I took a look on those. Yung NVT was grabe, nag $8 siya kagabi. Imagine, we were buying this at $2, $2.50, $2.20, $2.30. At these levels though, at 8 to 10, baka it's more of a sell. So I will take a look at what happens there. We shorted Bumble, 36. After hours, it fell to about 30s. Covered it ASAP then. I think there is opportunity in the market even if the index is pretty high. So I am also cautious because your Nasdaq is 13.4. So you can see na I fell down to about 1.8 yan. Nag-add ako ng additional 1,000. So ni-recover ko muna. Yan. Okay. So you can see week on week up yan. Nung bumaba, tapos umangat yan. Yeah, so I might take profits pag mga 3.3 to 3.5 tapos we'll withdraw. I'm gonna try to do that. So this is in my account na isa. The other account has GDRX. It is a short on Coinbase and I'm long on Zim. So I'm long shipping. I'll be looking on some potential opportunities on the entry points on a few names. Masyado na rin malakas yung galaw. You can see, bingo, hanep, yung mga bayan na genomics, di ba? Medyo mataas na rin. Intelia, I might look at 60 to 66. This one might actually still continue higher for a trading standpoint. Super taas na ng solars. So I am not not looking to enter any solars anymore. I'm waiting for weakness on mga Coinbase. Maybe 100 yung next resistance niyan or 110. I saw the report that was horrible. So, yeah. Mga watch list natin yan. So far, ang pinaka-laggards are the Chinese stocks. That's why, since laggard pa siya, I figured mag-long muna sa kanila. So, Alibaba, I felt late ng downside. So, that's why I entered some Hong Kong listed names muna, knowing that Alibaba is also having a primary listing in Hong Kong. So, from a dumpster fire treasure, hindi nyo mabili siya sa eToro, pero I am doing dumpster treasures for Archer Aviation, Lilum, and Up. I'll discuss that in Awesome 10X members. But yeah, those are some ideas that I'm looking to do within the next week or so. Next week is still a ton of earnings reports. So I'm looking forward to Zoom video and Zim. And C Limited, our favorite C Limited. Thank you very much. See you again. I'll show to you how the small account challenge works week on week. So please stay tuned and let's update ourselves. Bye-bye.